Do I think we're in a crypto winter? No, I don't think we're in a crypto winter. I think we're fighting through a lot of macro issues, right?
Over the past few months, the crypto market has had several price drops, and many people believe the feared cryptocurrency winter is finally here. In a recent interview with Bitboy Crypto, Michael Saylor, the CEO and co-founder of MicroStrategy, an American software company that holds the most Bitcoin for all institutions worldwide, declares that what we are experiencing now is not a crypto winter. Saylor explains that we are only fighting through macro issues such as inflation, fears surrounding the degree of regulatory intervention, global geopolitical crises, and similar issues. Welcome to Savvy Finance. This video examines Michael Saylor's thoughts on critical issues such as regulatory intervention on crypto, geopolitical crises, and how everything affects the crypto market. The staunch Bitcoin bull talks extensively about the causes of Bitcoin's volatility and how everything will change by the end of this quarter. Please watch the video to the end and hit the like button. Enjoy. Michael Saylor believes Bitcoin is maturing fast. In his interview, the renowned business executive and billionaire points out that previous Bitcoin cycles have seen 80 to 85% drawdowns. However, nothing has come close to that within the past 2 years. Saylor states that this indicates that the asset is maturing. While talking about Bitcoin's volatility, Saylor explains that there are many reasons for the crypto's high volatility. He names lack of wash trading rules, extreme leverage, cross-collateralization, and uncertainty around regulatory intervention as some of the reasons for the high volatility. Saylor also states that we are not in a crypto winter, but a point where many countries are still deciding how they want to go about regulating the cryptocurrency industry. As such, people do not know how far countries like the United States and Russia will go when they announce regulations for the industry.
I think the first decade you saw these drawdowns of 80, 85%. And I think in the last 2 years, we've seen drawdowns that are like maxed out at 50% or so. Might have been a 55 or 53% or something. But the volatility is less. I think that the asset class is maturing. I guess, there are a lot of reasons why the asset class is volatile. The lack of wash trading rules, the extreme leverage, the cross collateralization, the security tokens, the 24/7, 365, the uncertainty, the accounting treatment, right? I could give you a litany of why it's volatile. I could tell you why it's getting less volatile, and that's as more institutional investors come in, and as their time horizon gets longer, it'll get less volatile, and it will get less volatile as more regulation comes. And ironically, a lot of things that people think are bad will actually be good for the asset class. Like if the House decides that they're going to implement the wash trading rule, and that means you're not allowed to sell something and buy it back the next hour, if that happens, a lot of fast money trading will be discouraged.
Right, that would be good. That would be good for the space, I believe.
That would decrease the volatility. Yeah, because like right now, if Apple stock traded down 10%, you don't sell 100 billion of it and buy it back in anticipation of tax harvesting, because you have to wait 30 days before you can buy it back. So Apple stock is less volatile because of that rule. But the cryptos don't have that rule. So it's like the tax law encourages you to sell whenever you have a loss.
Yeah.
Right. And that's kind of like, that's a green light for fast money traders to come. And they're like, since they should sell and they know you should sell, then they're going to make you sell so they can buy back cheaper. And so you've got some built-in structural incentives for it to be volatile. Do I think we're in a crypto winter? No, I don't think we're in a crypto winter. I think we're fighting through a lot of macro issues, right? Like people are uncertain about the degree and extent of regulatory intervention and what will happen. They're uncertain about geopolitics, be it either, Russia, China policy on crypto versus, Ukraine and the like. They're uncertain about monetary policy. Like they're like, oh, there's no inflation, so Bitcoin trades down. Oh my, there's massive inflation and the Fed's going to raise
so
interest.
Crazy.
So yeah. Bitcoin trades down, and so I think we're working through that. In the near term, you get beat up a little bit, but there are countervailing forces, and the forces that are taking the volatility away are regulatory clarity. It'll be a good thing, and every single one of these things that gets fixed will decrease. It'll decrease volatility, and it'll increase the value of the entire ecosystem.
Today's episode is sponsored by iTrust Capital, the #1 crypto IRA platform in America. We allow you to invest in your favorite cryptocurrencies without worrying about taxes. That's right. iTrust Capital allows you to buy and sell your favorite cryptocurrencies completely tax-free. That means if you invest $10,000 into Cardano and it grows to $100,000, all of your profits are tax-free. Why is it tax-free? We took the existing retirement account industry and flipped it on its head. Instead of boring stocks and bonds, you can invest in crypto. How is it secured? Through Coinbase Custody, one of the leading cold storage providers with a $320 million insurance policy to protect against theft, hacks, and loss of funds. Roll over your existing retirement account, or even start a new one from scratch. Questions? Schedule a free call with one of our crypto retirement account specialists, and they can help you discuss your options. Start your crypto IRA today and retire early, only at iTrust Capital. Click the link in the description to open a free account now.
There might be a lot of uncertainty now, but Saylor believes everything's going to change soon. Apart from positive regulatory intervention, he also states that Bitcoin mining companies are making huge steps that are bound to revolutionize the space. Saylor explains that giant Bitcoin mining companies are going public and raising a lot of money to stabilize the Bitcoin market. As soon as the end of this quarter, Saylor sees about 24 Bitcoin mining companies going public. When they can raise enough money, these public companies will stop selling most of their Bitcoin, making the asset even scarcer and increasing its price.
The second thing is all of these public companies, like public Bitcoin miners, as they come public and they raise capital, they're stabilizing the entire asset class. I don't know if you noticed, but Marathon did a big convert offering, $650 million a few months ago. And then just yesterday, I think they announced a $750 million ATM equity shelf registration. Other miners, Hut 8 have announced another shelf registration. Riot did a $600 million equity raise. There'll be 24 companies that will be public by the end of the quarter. TeraWulf came public. Core Scientific came public with a multi-$100 million equity raise. Anytime a Bitcoin miner raises money, there's only one thing that's happening there, which is that means that money is being spent either on mining equipment or it's being spent on Bitcoin. But ultimately, it's really being spent on Bitcoin because if they have the capital, that's that much less Bitcoin they're selling. And so this whole crypto winter idea was boom and bust cycles and living through the 4-year halvings. But what happens is once half of the hash power of the network is public, I don't know if you noticed, the Bitcoin Mining Council is like 46% of the hash power of the network now. And most of them are, not all of them, but a lot of them are public. As those companies come public and they buy up the private miners and they issue equity and they issue debt, then the amount of Bitcoin they sell decreases and the stock to flow increases. And the stock to flow eventually goes to infinity. And that means the available supply, each day goes to a trickle, and that creates price pressure. So those dynamics are going to decrease volatility. If banks are able to hold Bitcoin on their balance sheet, like the big banks, they get comfortable, and FDIC guidance would be a critical catalyst there, then you're going to see a big demand. And then if you see companies like Silvergate Bank issued credit lines, if you have FDIC insured banks, they get a green light to do stable coins, a green light to get into crypto lending, then people that own Bitcoin don't have to sell the Bitcoin. If they don't sell the Bitcoin, instead of holding it for 4 years, they hold it for 8 years. If they hold it for 8 years, it's the same as the stock to flow doubling. You see? Yeah. So there are all these dynamics, like even the BlockFi settlement. Well, it's painful on one hand. On the other hand, if you have publicly traded companies, or in this case, they're not public, but if you have licensed companies in the US that are able to raise hundreds of millions or billions of dollars of capital to give you yield on your crypto, then you're going to have a lot more people think I should hold it, not sell it. Maybe I'll buy it, not sell it. And so the key to an asset class maturing is you either need to be able to rent it, like you need to rent your building, or you need to be able to mortgage it. And if you can put a mortgage on a house, you'll buy a house. And if you can rent that warehouse, maybe you'll buy that warehouse and rent it out as an investment property. And so as the entire industry matures, and as people can mortgage things and they can generate yield on things, and as the Bitcoin miners get public and have access to lots of cheap capital, then I think what you see is volatility decreases, the price increases.
Saylor is not the only Bitcoin bull that believes some form of crypto regulation in the US will be great for the asset. If the market becomes more stable and regulated, many other institutions, pension funds, portfolio managers, and others will see the need to invest in the industry. A drop in inflation will also stop talks of 7 to 8 interest hikes and encourage more people to invest in cryptocurrencies and other asset classes in general. What are your thoughts on Saylor's interview? Please share your comments and observations in the comments section below. Also, remember to hit the like button and check our other crypto-related videos to stay up to date on everything crypto. Thanks for watching.